Hello everyone. Today we are going to study tax treatment of different forms of salary income. Dear students, in earlier lecture we have already studied about different forms of salary income and their tax treatment. So we have studied the tax treatment of basic salary or basic pay and other cash receipts which employee is getting from the employer. Okay, so there are another two forms of salary income, that is called as allowances and perquisites. So now we are going to study whatever allowances and perquisites which employee is getting from the employer. So we have to understand their taxability and tax treatment as per the Income Tax Act 1961. Okay. So as you know that uh, whatever allowances employee is getting is always chargeable to tax to the some extent. There are some allowances which are fully taxable, some are partly exempt, and some are fully exempt from the tax. So, first of all, we have to understand whatever allowances which are fully taxable as a salary income. So, the first allowance which we are going to study, that is called as Dearness Allowance. Normally, all public sector employers pay basic salaries to their employees according to the respective pay scale. Several other components are then calculated and added in the salary. One such important component is called as a dearness allowance, and which is popularly known as DA. DA employee is getting either in the form of percentage or fixed amount of, okay. So as a DA is provided to employee to protect against the price raise in a particular financial year, and it is generally calculated twice every year in the month of January and July. And according to Income Tax Act 1961, whatever amount of DA employee is getting from the employer is always fully taxable as a salary income. Okay. Next taxable allowance, that is called as fixed medical allowance. It is the allowance which employee is getting from the employer against some expenditure towards medical expenditure. Okay, so whatever medical allowances employee is getting, which is always chargeable to tax as a fully taxable allowance. Next taxable allowance, that is called as a tiffin allowance, which is also fully chargeable to tax. It is the allowance which employee is getting against the expenditure of tiffin. Normally, in some companies, they are giving their employees a free meal, either dinner or lunch or refreshment. But in some companies, they are giving certain amount of allowance as a tiffin allowance to the employees, and it is also fully taxable. Next allowance, that is called as a city compensatory allowance, is the allowance which is employees getting from the employer against the high cost of standard of living in a cities, which is also fully taxable as a salary income. Another allowance which is also fully taxable, that is called as overtime allowance. It is the allowance which employee is getting for extra work made by him in the company. So whatever overtime allowance received by the employee from his employer is also chargeable to tax, or it is called as a fully taxable amount as a part of salary income. Entertainment allowance is also the allowance which employee is getting from his employer, and according to Income Tax Act 1961, first of all, amount of entertainment allowance is added in the salary, and then deduction is allowable under section 16 to some extent. Means in the case of government employee it is fully exempted, and in the case of private employee there is a provisions or tax treatment for getting exemption of entertainment allowance under section 16. Okay, now we have to understand some partly exempted allowance and their tax treatment. So normally employee is getting house rent allowance from his employer. House rent allowance is the allowance which employee is getting against whatever rent he is paying for his resident in a particular place. So it is partly exempt and partly taxable allowance. So we have to understand how taxable amount or how exempt amount is to be calculated. So we have to consider least amount for the purpose of exemption of HRA. So it is the provision that is list of the following is exempt from tax. So we have to calculate three types of amounts. So first of all, we have to consider whatever actual amount of HRA received by the employee. Secondly, we have to calculate rent paid in excess of 10% of salary. And third, we have to calculate 50% of salary if accommodation or his residence is situated in Delhi, Mumbai, Chennai, and Kolkata, or 40% of salary in case of other cities. Means other than these four cities we have to consider 40% of salary. Okay, so after calculating these three amounts we have to consider least amount from these three as a exempt amount, and which is deducted from the total amount of HRA, and remaining portion is chargeable to tax as a salary income. Remember one point, in the case of calculation of house rent allowance and its exemption, we have to consider salary for the purpose of calculation of 10%, 50%, and 40% salary. So we have to consider basic salary uh, plus DA if admissible to retirement benefit, plus commission if in fixed percentage. So aggregate of these is called as a salary, and which is considered for the purpose of calculation of house rent allowance. So this is the simple tax treatment of calculation of exempt amount of HRA. Okay. Next partly exempt allowance, that is called as helper oblique assistance allowance. So it is the allowance normally a research scholar or research person is getting from his employer for the expenditure made to his research assistant. So according to Income Tax Act 1961, whatever actual expenditure made by the person for his assistants is normally exempted from tax, and remaining portion is chargeable to tax as a salary income. Next allowance, that is called as a children education allowance, and it is partly exempted allowance. So whatever children education allowance is employees getting from the employer, so the tax treatment is We can calculate exempted amount as rupees 200 per month up to maximum of 2 children, and remaining portion is to be considered as a taxable amount as a part of salary income. Okay. Next allowance, that is hostel expenditure allowance, and its exemption is, it is exempted from tax rupees 300 per month up to maximum of 2 children. So whatever amount hostel expenditure allowance employee is getting, that is to be considered, and whatever children's these employees having is to be also considered, and rupees 300 per month up to maximum of 2 children is allowed as a exemption. Okay. Now we have to understand what are the perquisites employees getting and how is taxable as a salary income. So dear students, perquisites means the facilities in addition to salary given by employer to the employee. Normally, there are some perquisites which are fully taxable, some are fully exempt, and some are partly exempt and partly taxable. So, it is must for all of us to understand the tax treatment of each perquisites. Okay. So, free meal is one type of perquisites which employee is getting normally from the employer, and whatever uh, amount which is spent by the employer on free meal of the employee, the exemption is up to rupees 50 per meal is normally exempted from tax, and remaining portion is to be treated as a taxable amount of free meal and considered as a salary income. For example, if company spend 70 rupees per meal for the employee, so in the case of, we have to consider exempted amounts rupees 50, we have to deduct 50 rupees from the 70, and remaining portion 20 rupees is taxable as a salary income, means that is added in the salary income. Okay. Another perquisites which employee may get from the employer, that is called as gift in kind. So whatever gift in kind employee is receiving or received from the employer, that is exempted from tax up to rupees 5,000. So if gift in kind having a cost more than rupees 5,000, so we have to deduct 5,000 as an exempt amount, and remaining amount is to be taxable as a salary income. And remember one thing, gift in cash is always fully taxable as a salary income. Okay. Next perquisites which employee is getting from his employer, that is accommodation. So there are two types of accommodation: rent free unfurnished accommodation and rent free furnished accommodation. Okay, so we have to understand the tax treatment of rent free unfurnished accommodation. So normally we have to consider, so there are two types of employee. One is government employee and another is private employee. So in the case of government employee, whatever value of accommodation is there as per government rule is taken as a value of unfurnished accommodation if employee is getting this facility from the employer, and is to be considered as a salary income and added in the salary. Okay. If employee is government employee and getting a facility of accommodation as a furnished accommodation, that is called as a rent free furnished accommodation, So we have to consider the its valuation as a salary income. So we have to calculate the value of accommodation as per the government rule, plus we have to add 10% of original cost of furniture in that value. So that is the aggregate of value and 10% original cost of furniture is called as a total valuation of furnished accommodation, and that is to be added in the salary income and which is taxable. So this is the perquisites which employee is getting and their tax treatment. Next perquisites, that is rent free unfurnished accommodation for private employee. If employee is working in private company and if company provided him a accommodation which is unfurnished, so there is a specific tax treatment to calculate the value of such unfurnished accommodation for the purpose of calculation of salary income. So this is an chart which shows the calculation of valuation of unfurnished accommodation from the income tax point of view. So number one, the cities having a population exceeding 20 lakhs, means the if person resides in Mumbai and the Mumbai's population exactly more than 25 lakhs, so in such case we have to consider the valuation that accommodation 15% of salary if the accommodation is owned by the employer, or sometimes if accommodation is not owned by the employer but which is taken on a lease or rent by the employer. In that case, whatever amount of lease rent paid or payable by the employer or 15% of salary, whichever is lower, is considered as a valuation of rent free unfurnished accommodation for private employee. Okay. Secondly, if the employee living in a cities which having a population between 10 to 25 lakhs, in that case, valuation of such accommodation is 10% of salary if accommodation is owned by the employer. Or if it is not owned by the employer but taken on low lease or rent, then the calculation same as above, that is 15% of salary or whatever lease rent paid or payable, whichever is lower amount is considered as a value. Okay. And third category, if employee resides in any other cities, means the cities having a population less than 10 lakhs, in such a case, valuation is to be calculated as a 7.5% of salary if accommodation is owned by the employer. And if it is not owned by the employer but taken on a lease or rent, then calculation same as above, like 15% of salary or lease rent paid or payable, whichever is lower. And fourth point is if accommodation provided in hotel, then the first category is not applicable. So valuation is whatever 24% of salary or actual charges paid to such hotel whichever is lower is to be considered as a taxable value of unfurnished accommodation. Okay, so this is the tax treatment of valuation of unfurnished accommodation which employee is getting from the employer. Okay. Secondly, we have to understand the valuation of rent free unfurnished accommodation of private employee. Sorry, furnished accommodation in case of private employee. So normally if employee is getting accommodation with full furniture, we have to consider the valuation of such accommodation just like as unfurnished accommodation Additionally, we have to add 10% of original cost of furniture in that particular valuation. So if we added 10% of original cost of furniture in the valuation like unfurnished accommodation, we can get the valuation of rent-free furnished accommodation as a salary income, and that is added into the salary. Okay. Now we have to understand the calculation of gross salary and other relevant provisions for the purpose of income tax calculations. So, as earlier we told that there are various forms of salary income. So, aggregate of all the forms of salary income like basic salary, cash and other receipts, allowances, and perquisites means after calculation considering various tax treatment, by agreeing all these we can get the amount of gross salary. So once we found gross salary, then as per the Income Tax Act 1961, the employee is getting deductions under section 16 of Income Tax Act 1961. So the first deduction which is allowable to the salary person, that is called as a standard deduction. And now amount of standard deduction is rupees 50,000. Earlier it was 40,000, but now it is 50,000, which is deducted from the gross salary under section 16. Second deduction which employees allowable under section 16, that is entertainment allowance. So remember, in the case of government employee, whatever entertainment allowance is he's getting is fully exempted from tax. But in the case of private employee, we have to consider one fifth of basic salary, rupees 5,000, and actual entertainment allowance received. So least amount is to be deducted as a deduction under section 16 for entertainment allowance. And third deduction which employee is getting for making the payments towards professional tax. Normally 2,500 is the professional tax normally salary earners are paying to the government. Okay, so whatever professional tax paid by the employee to the government, that is to be allowable as a deduction under section 16. Okay, so once we have to consider all the deductions under section 16, and if it is deducted from the gross salary, we can get net taxable income from salary, which is normally chargeable to tax. Okay, so dear students, this is the a general format for calculation of taxable salary income from the income tax point of view. Okay, so remaining portion and some practical problem we will see in next lecture. Thank you.